Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Today, we need to talk about Coinbase and the state of crypto so far in 2022. A year ago, Coinbase was worth more than $70 billion. Today, it is worth less than $10 billion. The entire crypto space is not healthy right now. It doesn't mean that it can't be healthy in the future, but right now it's not healthy. And I have some insights I think you really want to know and understand before you consider investing more in this space. And then I'll also give you my recommendations for what I think makes sense for investing in the crypto space and what may be around the corner. So let's first start with Coinbase. I have not been a fan of Coinbase since they went public 2 or 3 years ago. And the main reason that I said back then, that I'm telling you right now, is that the majority of their money comes from transactions and transaction fees, to be specific. At one point, the highest rate per quarter that they had in terms of fees that they gathered from their revenue was 84%, meaning about 84% at its peak. 84% of their money came from transactions. Last I checked, when it comes to the stock market, me and you don't like paying fees. We may donate, right, if I have to, or if I'm given the option, but in most places, we're not paying commission fees. And it's only a matter of time until the rest of the world, the Fidelities, the TD Ameritrades, and others get on that wave where they say, look, we're going to start to offer crypto and we're not going to do any transaction fees. Well, that's 84% of your money. That's going to be a problem. But also, when people start trading less crypto like they are right now, you're going to be in trouble, which is exactly where Coinbase is, and is why so far in 2022, the stock is down 82%, and we are not even done. This is not even December yet. They're already down 82%, which is why they went from a $70 billion valuation down to about 10. Now, this is a symptom of a lot of things. Number one, the crypto infrastructure right now is falling apart. You had FTX going bankrupt and going through all types of drama. You got BlockFi announced their bankruptcy, Celsius announced their bankruptcy, and now Genesis, another crypto app, is also going through bankruptcy as well. Now, there are a lot of people that say that this is just an absolute failure of crypto as a whole. It was always fake money. It was never going to work. And this is what you get. I'm not necessarily on that particular boat. However, there is some credence to that. Now, the other half of this is I could also argue that this is 2000 to 2002, where a lot of these .com internet companies said they were going to come out and make, going to sell books online, and people are going to buy vacuums and all these things online. People are going to, instead of doing movie DVDs or DVD movies, they're going to stream it over the internet. You could have said that back in 2001, and I think most people would not have believed you. And lo and behold, Netflix and Amazon are still here, right? Google is still here, and others have not survived. So yeah, there is somewhat of a parallel there, though I think crypto is on a different footing and a different understanding than where we were back in the early 2000s. So you can look at that at however way you want to look at it. But I will say for Coinbase, this is a significant problem. And I think the bigger thing behind it is this. When we look at Bitcoin, this is the primary cryptocurrency out there. It's not the only one, but it's the primary one out there. When you look at Bitcoin and you go back and look at, let's say, a chart that takes you back to 2015, okay, just throwing a year out there, you'll notice, and I'll put this up here as well for those who are watching on YouTube, you'll notice that there are 3 primary spikes for Bitcoin. Number one was in 2017. That's when it first came on the radar for average people like me and you, and it was a meme trade. This is like the original meme trade. Everybody was piling into Bitcoin, became a thing. It hit, 10,000 or whatever it was back then, and then fell in 2018 and had not really recovered until when? Until the pandemic. And a lot of things took off, including Bitcoin. And Bitcoin spiked, from, let's say, around 10,000 or so, and got as high as about 57,000 during the pandemic, and really ran all the way through to 2021, March of 2021 to be exact. So 1 year into the pandemic, you went from 50,000 to close to 60,000 in terms of the value of Bitcoin. That was all meme trade driven. So that's the first 2 spikes in Bitcoin, all driven from nothing, no real fundamentals, nothing happening at the time that said that Bitcoin is 6 times more valuable than what it was 12 months ago. The exact same thing happened in 2017, 2018. There was nothing really happening other than people were just excited to have this new thing. Then, just like the first 2 times, Bitcoin fell off sharply up until about, I would say, July or so, 2021. And this, if you go back and check your Twitter timeline, this is back when people were saying, oh, look, Bitcoin is going to hit 100,000. 100,000 for Bitcoin before the end of the year. This thing is really going to happen. Bitcoin started to pick up again, and then it hit its all-time high, about 63 to 65,000 in November of 2021. And people were really pushing for it to hit 100,000, and it never recovered. At least to date, it has not recovered, and now Bitcoin is back down to about 16,000. Now, there are 2 ways to look at this. You can say, oh, look, the last 2 times it came back to 10,000, that's when people started to buy more Bitcoin and it started to pop. That's fine. If you're into that level of technical analysis, you might have a case. You very well might have a case. But what I can tell you is the 2 or 3 times that Bitcoin has spiked, it has only been off of vibes. And that's really it. That is really it. There was nothing that truly happened, unlike, let's say, people buying more goods. Let's say like Target. Target started to do well in 2020 and 2021. People were spending more time at home. SWK, Stanley Black & Decker, people were using tools a lot more to build stuff around their home. So like Lowe's, Home Depot, Target, Stanley Black & Decker, all of those companies did quite well during that specific time. Think of a company like Moderna. When we were in the throes of the pandemic, that stock did incredibly well because we were looking for vaccines. So all of those things made sense at that point in time, but none of that really made any difference for Bitcoin. Like whether I'm outside or inside, what difference does it make, right? How does that make Bitcoin or Ethereum or any of these more valuable? There really wasn't anything driving it other than people just wanted it more, and it was trending more, and people were at home honestly bored. And if you were to take out those 3 events, where would Bitcoin be now? Where would crypto be as a whole? Now, all of that said, I'm not saying that crypto isn't valuable. I'm not saying that there aren't any true uses for it. I think Ethereum is incredibly valuable, and I'm not selling my crypto, okay? I'm not here to tell you to buy or sell crypto. What I am here to tell you is that there is a significant problem, and you as an investor need to decide and figure out where you fall on this issue and how much do you want to expose yourself to a very volatile asset that rises and falls based on who tweets what. Because remember, Dogecoin was a thing based off a tweet. And that's really what it was, where it took off because of an Elon Musk tweet. He gets on SNL, says this whole thing is not real, and then it falls and never recovers. That's not how I want to put that's not where I want to put my money. I don't want to, build generation wealth based on what someone else thinks in and of itself, as opposed to what is actually happening, what I can actually measure. Now, tying this back to Coinbase, again, what you have to do right now with all of your investments is evaluate them for what they truly are. And that goes back to understanding what their financial statements are telling you, how well the company is doing, and how they make their money. The thing that worries me about Coinbase, the thing that worries me about Target, though these are completely separate issues, is that, look, if you are making your money primarily on transactions, and these transactions come and go for almost no reason at all, that's an issue for me. Okay, that is a huge issue for me, and that's the issue with Coinbase. The other side of this too, when it comes to Coinbase, is similar to Target in this exact fashion. They're doing worse than what they were pre-pandemic. How? Like how are we doing this? For example, in Q2 of 2019, Q2 2019, Coinbase brought in $38 million in net profit. After all the bills are paid, Q2 2019, they had $38 million left over. Great. Sounds good. I like it for you. Wish it was me, but that's nice, right? However, if you go to Q2 of 2022, after the pandemic and after things have settled down for a bit, they lost $1 billion. You went from pre-pandemic, before, Bitcoin was really taking off like it did in 2020, you brought in $38 million during that quarter, and then on the same quarter in 2022, 3 years later, after your Super Bowl commercial, after everybody has your app and after all this kind of stuff has happened, you are negative $1 billion. You lost $1 billion during that exact same quarter. That's a problem. Okay, and in all of 2022, they're losing significantly more money than what they were in 2019. I'll give you a pass, just like I did for Target and other companies. I'll give you a pass in 2020 and half of 2021. I'll give you that. Okay, I think everybody, including Disney, right, has had some weird anomaly during that time. However, if you were making more money in 2018 and 19 than what you are now, post-pandemic, for air quotes for those who may be listening, that's not going to add up. That's not going to make sense. That is a problem. So when it comes to crypto, again, you got to decide how much you want to put into it. My rule, and I say this for individual stocks as well, is no more than 5%. You can afford to be wrong with 5%. If it works and it takes off, that's great. If it doesn't, it's not going to alter your financial plans. It's not going to change your retirement date. At least it shouldn't, right, if you are limited to 5%. But the other issue that I've had with crypto, and I will fight anybody who disagrees here, is that it is extremely difficult to evaluate. It is, I can't say it's impossible, but it's extremely difficult to evaluate, to say what is the true value and difference between one cryptocurrency versus another. I can sit down and tell you the difference between Walmart and Target, and we can see the different results between the two and understand the business model. For example, here, half of the money that Walmart gets is from groceries, whereas only 20% of Target. Okay, now think about that. Why do you think that Walmart is, positive so far this year? Not by a lot, but it's at least positive to treading water, whereas Target is down 30, close to 40%. Well, people need groceries. They have to have groceries in either case, whether you like it or not. Well, I guess it's not a whether you like it or not, but you have to have groceries even though costs are rising. And that part is whether we like it or not. Well, Walmart is always going to get that grocery money. People are always going to need groceries. Whereas Target, you can only bring in a maximum of 20% of your income there. The clothes, the home goods sector where they over allocated money and stuff there and mismanaged that portion. People are stealing $400 million of stuff from Target. That's much more difficult, right, to do at a Walmart where they're making half their money from groceries. That's an essential thing. It's why other grocery stores had done, relatively well. I don't know where Kroger and Target, Kroger and Albertsons are after the merger, but prior to that, Kroger's was doing pretty solid, right? Because it was a necessary, it was a defensive stock, a truly defensive stock. Whereas 80% of the stuff at Target, because we're taking up 20% from groceries, might not have been necessary, right? I don't need that desk. I don't need a lot of the fancy clothes and stuff they have at Target. Therefore, I can forego Target and go to a Walmart. Those are very specific things that I can evaluate. I can talk about the CEOs. We can talk about Disney, for example, and what was going on, and really evaluate all the different pieces to give me a determination of whether or not I think something is valuable, or perhaps most importantly, decipher between one thing and another. Now, whether you're right about those determinations is totally, up to debate. When it comes to crypto, that's not necessarily the case. Yes, there are technical things behind it. There is a technology piece that makes Ethereum really interesting that Bitcoin and obviously Dogecoin do not have. There are things you can do with certain crypto coins that you can't, or cryptocurrencies rather, that you can't do with others. That's all well and fine. However, the tech piece and how interesting and cool the tech piece is different than the actual value of it and why something rises or falls, which no one can reliably tell you why Bitcoin has been down when it was supposed to be, cryptocurrencies as a whole, why it was supposed to be a hedge against inflation. It's down, and nobody can tell you why. Right, it was supposed to be at 100,000 at the end of 2021, and nobody can tell you why. Nobody can tell you why it dropped after the pandemic, other than the fact that it was just hype, and people just bought into it. I can tell you, we've been talking about this whole time. We know why oil stocks are high, right? We're running to the holiday season. People use more oil. We had a crisis with Russia and Ukraine. That makes sense. Makes sense as to why healthcare companies are doing well. It made sense back in the pandemic why healthcare, not necessarily healthcare companies, but vaccine companies did well back then. It made sense why Zoom did so well during the pandemic and is not doing well now. All of that makes sense, right? And that's just basic logic as to, well, yeah, we were all on Zoom back then. Oh yeah, we're not on Zoom as much anymore. Boom, Zoom down 75%. Makes sense, right? We can understand why certain stocks rise and fall, not to 100%, accuracy, but a lot of it is based on logic. Whereas nobody can tell me why y'all were telling us, I'm saying, crypto bros or whatever, why y'all were telling us this was a hedge against inflation, and it's not. Why? Right? That makes it a lot more difficult. Not saying it's impossible. Not saying that you should get out of crypto or anything else. But what I am saying is this area is being extremely tested right now. And pay attention to what's working and what's not working. If you want to be exposed to it, 5% would be my rule. The other thing is, and Warren Buffett has said this too, you don't have to have it. You absolutely do not have to have crypto. Again, I'm not trying to push you in any direction whether you should or shouldn't. That's not my job. However, I can tell you that whether it's Buffett or not, you can be incredibly successful. We've talked about so many different stocks and industries that have done well this year and have done well over the last several years that have nothing to do with crypto. It doesn't have to be your only avenue, right? It might be the most exciting during certain periods, but you see those periods are relatively short. Okay, so just throwing it out there. At some point, crypto, I believe that at some point, crypto will be back. And it will probably be back at the exact same speed it was last time, where it goes up in a straight line. And then we'll see what happens at that point in time. Maybe one day Bitcoin will get to 100,000. It wouldn't actually shock me based on how violent these swings have been. However, you want to know why it is doing that and whether you want to be exposed to it. And you really want to know, like, should I get into it because I want to get into it, or are you getting into it just because everybody else is doing it and you see everybody else making money, so you want to hop onto it and ride the wave? Because that's what happened in 2017. It's definitely what happened in 2020. You want to figure out, is that going to happen, in 22, 23, 24? Well, I guess it's already 22, but 23, 24, 25, and what you want to do between now and then. Some people are buying and just holding on. I bought some. I've had been dollar cost averaging like I do everything else, and I'm just sitting on it. And if it goes, fine. If it doesn't, oh well, right? It's less than 5% of my overall money. I can be fine with that. Okay, so again, not everybody needs crypto. Coinbase has definitely got some issues. I don't think Coinbase is going to go off into the FTX, BlockFi, Genesis, Celsius area. It wouldn't shock me if they do, but I don't think they're going that particular route. But I do think it is a troubled business where they're taking a long walk off a short cliff, where you are making your money in a spot that people don't like to pay fees, and they have other options. If I buy and sell Bitcoin on Cash App, I don't think I'm paying any fees there. I can go back and double check, but I don't think I am. And if I'm doing something on public and I'm buying and selling, Cardano or whatever else is out there, I can donate. I can choose to donate, but I don't think I'm paying any fees there. I can go back and double check. Y'all let me know in the comments, but ain't nobody paying these transaction fees like that. So you make 80% of your money from that, that's going to be a problem, especially when, again, transaction interest ebbs and flows. It works well when it was Super Bowl. Ain't working well right now, so you want to be very careful about those. So those are my thoughts about the crypto space. Let me know what you think in the comments below. I try to give a good measured take and an honest take of where I feel or how I feel about it right now. So that's what's on my mind. All right, so this week we got Thanksgiving. I'm going to eat and sleep, talk a lot about that, but I've also got some new content that's going to be coming out for our members only. You want to make sure that you get that content as soon as possible, and to do so, you can click this link right here for the members only. All right, that's it for me. I'll talk to y'all tomorrow.